General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. So I did the charts. Let's just go over them. Crazy start to the month. Week 3, 30K. Looks doable. We already hit 29K. Hit 28K last week. Gonna be looking at 29.5 as well. Previous week's range. I'm interested in seeing a return all the way back to discount, but still can't fade this. We might even get like a 50% run here. Maybe a playoff of this week. Could gap up to 30K. It's been so much good news, I wouldn't even be surprised. Going into week 3, week 1 was here. That Monday was Friday. It's options expiry week this week, so it's the most dynamic week. The hour chart. This would be ideal. Breaker block. It got the OTE vibes. Right around here. See, that's it. Yeah. Let's look at SPX. 7,700 previous month's high. Then previous week's range, which is not as dynamic as NASDAQ. We still got that gap here, still a gap and go. Gonna be watching this week here. There's breakers up in there. Same thing. We need that rebalance here. This will be like the original consolidation in the market maker model. if we get a smart money reversal. So far, none. H1 levels. This is S&P. So here, weak push up, but over here strong. So decouple markets. I believe US 30s toe up too. EQ of last week would be first target. Really Friday, this new day opening gap and this low resistance liquidity run. We just got to break below this. Use this like an inversion or something. SPY. $770. Previous month's range. Don't really got that many gaps over here like it is on the futures charts. It's a lot more dynamic. Here we kind of open, took care of business. This is an implied fair value gap. There's a gap here. Previous week's EQ does make sense, at least for a rebalance. H4. Yeah, new day opening gap is amazing. Even that weekly open, Monday, Tuesday, or that Monday. Let's go here. It's like an order block at each previous week low. More of a rejection block down here. QQQ and the 750. See on the weekly. No gap here. Previous week's low has a gap. Daily's amazing. And we got a flat top. It's kind of exhaustion, but that was because we closed. I see why William O'Neill says that's exhaustion now. It's not strength. It's just chilled at the end of the day. Balance here, EQ here. Take a look at the hour chart. Lots of lows here. This is a weak low too. QQQ's just been unfadable. And last chart I'm gonna look at is Nvidia. Nvidia going to 250, pretty strong. We wicked that. See if we get followed through next week. Kind of been chilling. It's that old all-time high here. I'm really watching this more than this because it could just be playing here. Dipping back below this old all-time high, it's like, all right, this might be the retracement we need on the indexes since Nvidia is the heaviest weighted. But closing above, Nvidia start taking off. They report the 20th. So that's what, five. If they report in 8 days, you might not get no pullbacks this week. It might just run just on the fact that everybody else had good earnings and Nvidia is the big dog of earnings. So I'm have my eye on that. It'll keep me from trying to pick the top if I see Nvidia running. You can't fake that. Alright, the chart work portion. It is options expiry week, so I went through the 15th. CPI is Tuesday. Yeah. And they do the Fed chair nomination vote. They finna vote Warsham. Powell already gave the blessing. As long as they don't mess with them charges, he good. PPI's Wednesday. ECB is gonna be important. Oh, they got another holiday. Europe got all the holidays in May. Lord. We got retail sales Thursday. Thinking about Tuesday high of the week because I want to sell. COT. See commercials adding on loans. Not so much shorts as they are loans. Non-commercials adding loans and shorts. Commercials got 70% the long and short. They're playing both sides. So it's not really a big institution sponsor move to one side for S&P. So active reportable side is net bearish buy. It's not bad. Commercials are net long, but only mildly. 0.93% of open interest. That's very little. That points more to consolidation with slight upside bias, not a clean big move. All right, so it's not a extreme cut set up by itself. Commercials are net long, but only mildly. Consolidation with a slight upside. Not a clean big move. Let's underline that. That's the important part. The more interesting part is the large specs are short while commercials and small traders are long. That can support a rally or a short cover and bounce, but the commercial position is not large enough to call it a strong bullish reversal setup from COT alone. See, Wilco, good. Mild commercial strength. Large specs are short, commercials are long, small traders are long. That means the largest bearish force is a non-commercial fund side. Commercials are leaning bullish, but small traders are also bullish, which weakens the contrarian quality of the swell up. Okay. NASDAQ. Mild bearish to consolidation setup. So it's funny because it's been saying that about NASDAQ, but NASDAQ has been having the earnings. It's been outperforming S&P, yet commercials are net short and have been for the last 5 or 6 weeks. Commercials net as a percent of open interest is 1%. That's mild commercial weakness, not unusual weakness. Commercials moved from roughly point plus 16 net long last week to net short now. That's a shift of 3,000. That's a lot. That's a bear shift, but not large enough by itself to qualify. Okay, so they taking profits. Large specs are nearly flat, but slightly bearish. Commercials are also bearish. That means that the public is on the long side, while everybody else is taking profits. Okay, slightly bearish. Continue. Caution for loans. It's been saying that, and we've been buying. True seasonal. Only consider a short if the seasonal pattern is rolling over or pointing lower. Yeah, let's see what the Fed watch. So what is it? 6% chance for June and 12% chance for July. And the 15th is when we get wash. These are the earnings. It's nothing that we gotta worry about for NASDAQ or SPY. It's some interesting stuff, but nothing that's gonna move. For the sentiment, a little bit more bullish, a little bit, not a little bit, but a lot more cash on the side, and ain't nobody leaning that bearish no more as far as sentiment. We're not as greedy as we was last week, but we still greedy. And this is the 9 weeks of days. Basically, we ain't been having no pullback since the Iran ceasefire. It's just been one-sided on everything. SPY. I'm on 700 on the SPY. That's $30. Need to work on shot selection, OSI, daily profiles, and opening range gap. Case study, I'm playing is price. Conservative, not aggressive because we're in deep premium. I'm thinking sales have the better RR in Tuesday's CPI, so that's the strike day. That's the week overview. That's probably fastest it's ever gonna get. All right, y'all. Peace.